According to the Associated Press, consumer prices in the United States increased by the highest in 13 years in June, extending a trend of greater inflation and fueling concerns that the swiftly recovering economy is making goods and services more expensive. Consumer prices jumped 0.9% in June from May and 5.4% over the previous year, according to a Labor Department data released Tuesday. This is the highest 12-month inflation spike since August 2008. Core inflation, which excludes volatile oil and gas prices, climbed 4.5% last year, the highest level since November 1991. The acceleration in inflation, which has coincided with the economy's quick rebound from the pandemic recession, has raised fears that the Federal Reserve could be forced to abandon its low-interest rate policy sooner than expected. If this is the case, the economy could be weakened, and the recovery could be jeopardized. Officials from the Federal Reserve have frequently stated that the increase in inflation is a transitory response to supply shortages and other short-term disturbances, and that the economy will swiftly recover. The average price of a second-hand car increased by 10.5% last month, the highest monthly increase since records began in January 1953. For the third month in a row, that bump accounted for roughly one-third of the monthly gain. In June, hotel room rates increased by 7%. In addition, the price of new autos increased by 2%, the largest monthly increase since May 1981. Automobile prices have risen as a result of a semiconductor scarcity that has prompted automakers to reduce manufacturing. Restaurant prices increased by 0.7% in June and by 4.2% over the previous year, indicating that many businesses are raising prices to offset rising labor costs.